Hello viewers. Yeah, so it's been a while since I last posted a recap. So in this video, I'm just going to recap a few trades from this concluded week for study purposes, and I believe it will benefit some of you. Yeah, so as you can see, this is a week two. Week two of May was between 8th of 12th. So we had about 5 trading days, and I was able to take only 2 trades. And on Monday, I missed a good trade, and I'm going to recap it for study purposes. Then the last 2 days, I didn't have major confirmation. So let me just jump straight to Monday. So on Monday, that is when I had the missed. So basically, price didn't fill my limit orders by a few pips, though the setup was successful. So I just want us to dive into it so that you can, understand my thought process behind that trade, despite it being missed. So let me just open its daily journal. So this is the daily trading journal for the 8th of May. It was a Monday. We didn't have any news. So as you can see on our H4, we had a bullish bias. Then I was able to get a setup on my M15, where price tested the zone. Then I was able to get a confirmation set up on my M5, and as you can see, it my limit orders didn't get filled up by a few pips. You can see, yeah, these things will happen. You don't have to beat your head over it, but pick lessons. So let me just jump straight to the back testing software. So let me just start from the daily. So I'm just going to go through the trade breakdown of how I narrowed down to that entry, though it didn't fill me, but I just want us to appreciate the breakdown. So let me go to my H4. So now, as you can see in my H4 time frame, I wanted to jump to my daily. Let me jump to the daily. So now, if you look at NASDAQ on the daily time frame on Monday, before the New York session. So now notice on the daily time frame, we have a zone there, a zone that didn't get mitigated, right? So we have a fresh zone there, right? And we also have equal highs there, right? We have equal highs there. So now those equal highs, they represent liquidity, meaning we have a liquidity right above those equal highs. So meaning we have a draw on liquidity, and we also have a zone that hasn't yet, gotten mitigated. So now by default, my bias would be price retracing down, then pushing up, right? Pushing up to the unmitigated zone. Then we could then have a potential reversal at that unmitigated zone. So now meaning my bias for the session was bullish. So let me just jump to H4. So now H4, same thing. We have equal highs, that is liquidity. Then we also had some sort of a break of market structure there that gave us more confirmation in regards to the bullish bias. So meaning I was looking out for zones within that liquidity void for price to reverse up, right? So that is H4. Let me now go to M15. So now M15, now as you can see, M15 we have a zone right there. We're able to identify a zone there, right? Before the New York Open. So if you notice, my time is if I move that is 9:30 and 9:30. That is the New York Open. So let me just push price towards the open. So now before the open, price was basically compressing towards our zone right there. There. Exactly there. So now as soon as price had tapped into that zone there, so usually aggressive traders would buy at current market price and put their stop losses right below the zone. But now in this scenario, I decided to await for confirmation. So let me just take it to my M5 in regards to getting the confirmation. Okay, so now as we can see now, price has already tested at the M15 demand zone. So now what we're waiting for is basically confirmation, right? So what I'm going to do, I'm just going to mark this swing low that price made, right? That swing low. So let me just remove that. Okay, I think that's now much more clear. So let me just play it. So now what do you notice? Price then pushed up. So now when that swing low there represents something, so I'm just going to add something. Let me get a text. So now down here below that swing low, our price created a liquidity, right? And we call that we can call that sell side liquidity. So price pushed up, then it then pushed down. So now when it pushed down, it took out that sell side liquidity. So let me just play. So now up here we have a level formed. So now for us to get confirmation, price has to break that level there, right? Price has to break. So now what I was looking out for is something like this. I'll break that level, then I'll retrace a bit before we can buy. So that is a sort of so that is a sort of a confirmation I was looking for on my M5 time frame, right? That was the kind of confirmation I was looking for. So let me just play it forward. Yeah, so now as you can see, price broke that level, right? So that then confirmed to me a break of structure. So now meaning all I had to do was place my limit orders along this area here. So let me just open an order. So I'm going to put a buy limit. So we're basically back testing the confirmation entry on my lower time frame. A moment. So I'm just going to place my buy limits somewhere there. And then I'll put my stops. Sorry, buy limit somewhere there. And then my stops right below the zone. And then I might take profit probably somewhere there, right? The next level there. So that was my sort of bias, as you can all see. Let me just shift this a bit. Yeah, so now price basically broke that level. So meaning I was now waiting for price to retrace down before going up. So let me just play it a bit. So you can see price missed my limits by a few pips. And that was the trade basically that we had. And you can see here it missed my buy limit. But what I'm just appreciative about is that the setup played out eventually. So there's what we call the fair value gap. That is something which I didn't so I should have placed my limits along this along that fair value gap there, right? So right there we had the fair value gap. So if I had my limits within that area, you can see that zone there. That is what we call the fair value gap. If I had my limits at that fair value gap, I would have possibly, gotten filled. Yeah, but that is it. That was my first trade recap. And if I can just go to M15, yeah, you can see how it, bounced off that M15 zone. It was a good trade basically. So now let me jump straight to, let me just remove these. Let me remove these. Okay, now let me now jump straight to the final recap. 10th May. Let me open that. 10th May. Yeah, so this is my daily trading journal. So now, for those who remember, on a Wednesday we had a CPI. CPI is it's a very, very scary fundamental, and I usually recommend traders to stay out of it. It has a reputation of blowing accounts. So we had CPI around 8:30 a.m. at New York time. So I had to wait for CPI to cool down, the stomach to cool down. So I was able to get a bearish bias, as you can see on my H4. And on my M15, I was able to get a trade set up, as you can see. And as you can see, the setup played out successfully. So I'm just going to do a breakdown of this. So let me just jump straight to, let me go to my H4 and jump straight to Wednesday, right? Wednesday. So let me just play it. So on Wednesday, we had CPI. Yeah, so that was CPI, as you can see. Price, violently, it pushed up aggressively. So when it pushed up aggressively, it took out, the equal highs we had on Monday. So we had some sort of a fake out there. So the CPI basically pushed price up, and that price basically, took out those equal highs. So now, meaning my sentiment was a potential reversal, right? So I was anticipating a potential reversal to the downside, basically. But of course, I had to wait for confirmation. So let me just jump to my M15. M15, let me just mark out. Let me mark out, let me jump to 10th, right? So notice we had a CPI at 8:30. Yeah, that was CPI. So now see what it does. It took out that high. So now meaning we had a potential reversal to the downside, right? So let me just play it a bit. And now notice on the daily time frame, I talked about that zone there, right? So you can see CPI basically pushed up to that area there, right? So in the daily time frame, we have our zone up there. Tested, though not fully, but we had a slight mitigation of that zone. So meaning it gave us a potential bias, to be bullish, rather to be bearish, as you can see. So in my M15, I had to wait now for confirmation. So price then dropped. So let me just mark out. So during the NY open, price then pushed up. So when price pushed up, so now what we are seeing here is some sort of what we call what do they call it? An accumulation. So price was basically trapping orders here. So maybe the M5 can show it better. Let me jump to M5. M5. So if you look at the M5, you notice some sort of compression. So now notice the 3 drive right there. First drive, second drive, third drive. So when price did that 3 drive, of course, I was anticipating a potential drop. So I had to mark out this previous low, a potential break of structure. So as you can see, price then broke that structure. So as soon as price broke that structure, my sentiment, it gave us a confirmation now to sell. So I marked out my area to sell right there. So then, of course, I placed my limit orders along that area there. And I put my stop loss above there, and I put my take profit along that, liquidity void there, somewhere there. Yeah, so now as you can see, when price had to, go up, fill my limit orders and then, reverse to the downside, right? It was one of those beautiful setups that, played out on Wednesday, right after CPI. So now something I just want to point out is, our patience. Usually when the session starts, people want to jump into the markets, to capture that volatility. But sometimes you need to, pause and interpret what is happening, what is the bias, what is our price trying to do. And of course, my usual trademark confirmations this setup here, where we have the break of structure, right? You have some sort of low there. A moment. Price forms a high, then forms a low, and then price breaks that high. And then we have some sort of break of structure, right? So the break of structure is right there. So as soon as price breaks structure, then we can look out for areas to enter. Then we can place our limit orders before before selling. Yeah, so this is the sell model, and the reverse for the buy model. These are the same. Yeah, so these are the setups I just wanted to recap for purposes of study. Yeah, I think that is it. For those who have watched up to this this timestamp, thank you. And yeah, I look forward to more recaps, and I think let me stop at that. Thank you for watching. Bye-bye.